Welcome to today's video technical update presented by CMS Forex. It is Thursday, January 14th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Today we'll take a look at the pound dollar, dollar Japanese yen, dollar Canadian dollar, and the euro pound pair. This video is being prepared at about 2 p.m. Eastern Time. Starting with the pound dollar pair, I mentioned yesterday that although this was a completed bearish Gartley, the stochastic was still very bullish and hasn't shown any reversal in momentum yet, or even a pause in momentum, and that's reflected by today's price action following through with further rally and threatening to break our declining trend line here. Looking at the 4-hour time frame, it's pretty much starting to break it, but we still have this resistance here at 1.64. So I believe in a couple of sessions, and in the Asian European session, we'll see if this is indeed a completed Gartley that will lead to a decline, which would go to, looking at the daily actually, would go to the 157. Now, if it breaks above 1.64, we'll have to adjust that outlook and start thinking about this as a rally towards the resistance area. For now, we're still monitoring for topping action here at 1.64, and you see that the stochastic here is showing continuation after it failed to turn back down and crossed back up towards overbought area. So it's a cautious bearish outlook at 1.64, but it requires topping action, and it needs a very strong bearish action to validate our bearish outlook. The next pair is the US dollar Japanese yen pair, and today we had an early bullish signal at the break of this trend line, as well as a rally from the stochastic showing momentum, and you saw here there was a knee here, so there were signs of bullish momentum. However, there was a retail sales report that dampened the mood of risk appetite, and the dollar yen is usually correlated with that. So there was a big move back down, and now it's testing the support where it started. So looking at this swing projection, it could actually break the support and go to this 127% retracement area, which is the 90.45 area. So this may happen in the Asian session, and that would be there should be some support there. Looking back at the daily, see, that would be around this moving average. Looking back here, here it would be the 200 moving average, and the daily it's the 50. So it's an intermediate term support, and we may get some rally there. But again, now we have to adjust our declining resistance line, because here we broke our near term one, and now our short term one is here. So until the break of this line, we are still in sideways, actually in a bearish mode, until we break this line. Okay. The dollar Canadian dollar pair is continuing the price action that we anticipated, which is to come to the 1.02 support, the lower bound of the support area here, and that's a swing projection from here. The market held here at 1.04 and now is trying to complete this swing projection. Looking at the 4-hour time frame, by the way, here you see this kind of action suggests continuation when the market, in this case it does come up above, but imagine if it didn't come up above your oversold line, that would be indicate, and it crosses back down, that's a continuation signal. And we're seeing that here too. You see here it tried to cross back up, even if it did, it crossed back down, and that's a continuation indication of continuation. Here you see, even in the lower time frame, a swing projection such as this would bring the market to 1.02, which is around 127 retracement of this rally, and this would basically complete not a classic butterfly, but because this little rally here was supposed to come up here and hit this trend line, but it wasn't. It was a flat type of consolidation here. And in either case, this is a ABCD move down to the 1.02, and there should be some bullish forces there. However, we are in a very long-term decline. Looking here, well, even though the recent action is more of a consolidation, but we do have a bearish bias for a while now. So if we go for the bullish outlook, we have to see this trend line break and also reestablish this as support again, or a higher level as support, so that we can have a higher high and higher low before we can establish any kind of a bullish outlook. And here, a bullish outlook has short-term resistance here and intermediate term resistance here. So you will have to, even though this may not, I call it a short-term resistance, although it has been an intermediate term resistance, but now the market is sort of forming another consolidation zone, so that this may not be as valid, although we would have to wait till the test of this trend line to see. And if it breaks, we still have resistance here, around all this area. So until this area breaks, meaning the price action has to go above our 200 day moving average, then we could start considering the longer intermediate term bullish outlook. For now, it's still consolidating, and the most we can project for a rally is to the 1.1 area. Okay. The euro pound pair has already broken this congestion pattern, although you could expand it to look like this. What's more important is the recent sideways action here, and you see the market tested this resistance and came back down, and now is testing an important support area. It hasn't reached the the support bottom of the support zone yet, and the stochastic hasn't been oversold and is showing very bearish mode actually. So there may be further decline a couple more days or so. Looking at the 4-hour time frame, we see that short-term wise, it looks like the market is oversold, and there is slight divergence, but it's a weak divergence. So there may be some kind of a rally here in the Asian session, but I wouldn't expect it to be sustainable to test our resistance here. We may have another test of this, or we may have a retracement of some sort. Okay, to 0.8950. But even now it's not showing any reversal yet, so that's a little I'm getting a little ahead of myself. The market can still go further down to 88.50 and maybe even stretch it a little bit more until our stochastic reaches oversold. No, it doesn't have to reach oversold, but the signal has to come from across, and and the market has to break this trend line to start considering a bullish outlook. But a break below 0.8850 or 0.8830 means that we have to start considering the bearish outlook. See, this is a congestion pattern, and a breakout could be either side. So we're ready. You should be ready for either outlook, and just be alert. That wraps it up for today. Visit fxtimes.com for more fundamental and technical updates, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at CMS Forex, wishing you a great day.